All right. Good evening, everyone. I believe my screen is up and is visible. Also, I'm audible enough. So let me know in the comment section if you can hear me and if you can see my screen. Can you hear me? And can you see my screen? Let's get to verify before we proceed. Visible, audible. Audible. Okay, audible check. All right, so today is day 4, if I'm not mistaken. Today is day 4, and okay, today is day 4, and today we'll be looking at what order blocks and institutional footprints. Order block and institutional footprints in the market. Now, what do you mean by order block? What do you mean by order block? First, that's what we'll be looking at. So get all you need for tonight ready because we are starting right away. So when you talk about order block in trading, you're simply talking about what? Those zones where you have what? Large orders waiting in the market. It can be what? At the bottom, where you now call it what? Demand zone, or at the top, where you call it what? A supply zone. So that zone or those zones in the market, that's what we'll consider as what? Our order blocks in the market. Now, why are they called blocks and not maybe a thin line or something? Now, they are called blocks because what? When you mark your zone, they are being marked as a zone, not as a line. And that's why in today's class, you will see the way we'll get to mark those zones. They come as a zone because now these orders are not just placed at a particular price, they are placed within a region or within a zone. So that's what I mean by what order block. Now talking about what the institutional what footprint, we'll be looking at what some of those traps, some of those patterns exhibited by what the institution or the market makers to what trap traders in the market and all of those. So we'll be combining these two to actually what give us a valid order block. I think the last class I was actually saying something. I was like, not all break of structure or change of characters are actually what order blocks or valid order blocks. They are order blocks, but not valid order blocks. So tonight we actually will be what looking at what the valid ones and what the fake order blocks or the one to avoid while trading. I think this class may kind of like be sectioned into 2 parts because we need to actually what take our time to do a lot of examples and actually what get to study these order blocks. All right, so in tonight's class I've decided to section them into parts and what I will want us to cover under this order block, we'll be looking at what's our order block, the criteria for having a valid order block. Then if time permits, we'll be looking at what refining order blocks across what different time frames. Then we'll be looking at what mitigation and unmitigated what order block, what they all mean. So first, let's go into the chart to actually what get what we mean by what order blocks. So let me take this off. Now I'll be listing the criteria that we'll need for a valid order block. I'll be listing the criteria before I get to actually draw what I mean by order block, or I should go ahead to actually, okay, let's just get to draw what we mean by what are order blocks first. All right, so this is the first instance. You have this. and price gives you this, comes back down, gives you this. So if you see this type of price structure in the market, we have what? Here we have our breakout structure. At this point, you have what? Liquidity resting at the top, which you call what? Your relative equal highs at the top. At this bottom here, we have this point. This is what we'll be marking as our order block. So we'll mark that as our order block. That's too bright. Okay, so this is our order block, and this is what we want to see. This is what our inducement from the last class we talked about. This is what our inducement, which is also called what? Your IDM. Your IDM. So now what we want to actually see in this scenario is we want to see this price pull up, breaking above this point. So at this point, you now have what? A breakout structure. You have a breakout structure at this point. Now, why didn't I mark this point as my order block? Why didn't I mark this point? Let me get to turn on my highlighter. Alright, so why didn't I mark this point as my order block? Because this was where we had the last breakout structure. Now, this is where the concept of what inducement comes in. This is where the concept of inducement comes in. So at this point, this is your inducement and this is your valid order block. So what we want to see is price come back, take out this inducement, take out the early buyers. At this point, price comes into this zone forward, continuing to the upside. Now, let's look at some of the criteria that we'll be needing to actually give us a valid order block. Because you can have this inducement and have this zone and it will still be a valid order block for us. So now I'll be listing at the criteria we need to actually call this order block a valid order block. Alright, so let's get to list this out now. So the first criteria we want to see is what? Valid breakout structure, valid BOS, or change of character. That zone must give us what? A valid breakout structure or change of character. The second thing we want to see is what? There should be a fair value gap on that part. Sorry, a minute. All right. So I said the first one, we want to see a valid break of structure or change of character. The second one is what? A fair value gap. There should be presence of what? Fair value gap. The third on our list will be what? We want to see momentum in the market, or you call it what? Impulsive move. So momentum in the market followed by inducement or what? Liquidity. Excuse. So liquidity or inducement. After that, the next thing we want to also see in the market is what? The directional flow. The directional flow in the market. That's what? The directional bias of the market to actually what? Validate that zone. So following all we've listed here, this is what we'll be using as what? Our criteria is to actually what? Mark our order block. So first, I will explain all of this concept on the screen before we'll go into what? The live chat example to actually what? Get all of this done. So first we said a valid break of structure or change of character. I believe we all what? Know how to actually what? Get this done. So break of structure and change of character shouldn't be what? An issue for anyone here. So the next one we want to look at is what? Fair value gap. Fair value gap. Now, how do we have fair value gap, or what do we call fair value gap? Fair value gaps are what? Gaps on the candle, like on the chart. And now let me get to show us a clear example what we mean by fair value gap. So if you look at this point, looking at this point and having this point here, this gap between these candles are what we call what? Fair value gap. Now let me show you another one. If you look at this point, this is also what? Our fair value gap, and it is formed between what? Three successful candlesticks. It is formed between what? Three successful candlesticks. So what you want to see in the what? Fair value gap is, if you look out this price range here, you see that all of the candles intercept the next one. All of these candles, as it was moving up, you see this one entered into this one before what? Going up. So the gap, this space, if you look at this one, there was no intersection between this one. If you look at this point here, there was no intersection. So this gap is what we want to actually what? See at the point where we are marking our order block. So fair value gap is actually what? Needed. Now, why are we using fair value gap to actually what? Validate our order block? With the help of fair value gap, that tells you that what? Price needs to fill a gap. So with this fair value gap, this is what will actually will push this price up or to the upside, and that's what will actually what? Validate our order block for us. So that's how we'll be using fair value gap in picking our order blocks. All right, so let me get to zoom out, so maybe we'll get to actually what? See what I'm saying. Okay, so if you look at this chart, look at it here. You see, this is where this candle ended. This candle that is going down, this one, this is where it started from at this point. And if you look at this other smaller candle, this is where it ended, where the line is. And this candle in the middle, there is a gap on it. There's no intersection coming from any point. There's no intersection. Now, unlike these other ones, look at this one, there is no gap between them. So the gap on these candles, where you don't see the gap always on all parts. Let me show you. Look at this one there. If you look at this part, there is no gap. At this point, what you have at this point is what? Efficient market. The market is meeting up. But at this other point, there is no what inefficiency. So you are expecting the market to actually what rally into this fair value gap. So having this fair value gap, there is what a high tendency that what price will definitely pull into this fair value gap. So that's how I'll be using fair value gap. Now the next thing I mentioned we'll be using on the list is inducement or momentum. Okay, let me get to explain momentum first. So talking about momentum, this is what we mean by momentum. If you look at this point, if you look at the way this price crashed down to the downside at this point, you see the force to the downside was stronger. Then look at this retracement to the upside. It was kind of like in a chubby range. But look at this one to the downside. It was what an impulsive move to the downside. Then look at the correctional move. From this low here to the upside, the price was moving what? In a gradual move. It wasn't as aggressive as what you had at this point. Now, this price moved slow and steady to the upside to this point. And what did you see? There was a little bit of aggressive move to the upside. And at this point, you had something like a ranging market at this other point here. After having this ranging market, you see there was a little bit of aggressive move to the downside again before having what? Another push to the upside. After having that push, you see another form of what? Movement to the downside. Now, how do you actually know if there is what? An aggressive or impulse movement in the market? You see the candle, the distance between each candle, the speed. All of those things matters. Now, look at this point. This candle movement here is kind of like in a chubby range. Now, look at these other ones. You see the length of this candle, the length of this. Let's say from here to this bottom is just basically 2 candles. That means within 2 hours, because my time frame is on 1 hour. So within 2 hours, we had push from this point to this point, 2 hours. Now, it took us how many candles to actually what get back to the top? So you can actually what see the movement at this part to the upside. So that's how you know if there is what momentum or impulsive move where you're actually what looking at for. Now let's get to look at another example. Look at this point. You see the movement to the upside compared to this movement to the downside. So this is impulse and this is what kind of like less impulse. The momentum from this point to this point is lesser compared to what went down here. Now let's get to look at something else again. Look at this point. Look at all of these candles to the downside. But if you look at this movement to the upside here, you can't compare it to what you have from this point to the downside here. If you look at all of these other price action here, it's ranging. Meanwhile, what you had here is what? Of great impulse to the downside. So candle momentum or impulsive move, they are very, very important in actually what? Picking your zones to actually what? Take your trades from. And we'll be using it as what? One of those criteria in marking our order blocks. We are not just picking all break of structure or change of character as our order blocks. No. We'll walk through all of these points we've listed, all of these criteria we've listed, and our order blocks must meet all of those criteria for us to take a trade. If it doesn't meet any of those criteria, we are not taking the trade. We are not. And that's what we'll be doing tonight. So now let's look at the last one. We talked about what? Inducement. We talked about inducement and inducement or liquidity in the market. So now if you look at this chart from the last class, we already talked about what? Inducement. So if you have the market push up, come back down, even if this one gave us what? Even if this particular price gave us a break of structure at this point, this will have still was serve as an inducement, and we'll have loved this price to actually what? Come back down to this point to take us to the upside. I don't know if he's making a point. So that's basically what we want to see. We want to see a low before the zone we are taking a trade from. Now the same thing also applies to us trading from the upside. Let me get to take all of this out. So it's still the same thing if you're also in a bearish market. So now let's get to look at this pattern. So now what we will have at this point, this will be what our order block, and this order low will be what our inducement. This will be our inducement here, and this will be our order block. So basically what we want to see on this price chart is price come back into this point, then what continue to the downside. Now if this price breaks this low to the downside and you have price coming back fully into this zone again to take another sell, then this order block is what invalid, because what we want to see is what either price to create what liquidity before that point, then come back to tap us in before what continuing to the downside, or you will have this sorry, let me get to delete this. Or you will have this price coming to what sweep this liquidity, because what there is no liquidity before this point. So the market will actually what come take out this, then give us what we call what a reclaim order block at this point. Then price will come give you something like this forward continuing to the downside. So these are things you need to actually what understand, but we are not going to rush this process, because as I say, we will actually what take this class into what 2 sections, so that what we'll get to actually understand how all of these things are done properly. So don't forget, this is what we are working with. We are working with what our order block was what break structure or give us what a change of character. We need a fair value gap. We want to see momentum, then what liquidity and what inducement. Then to add a plus, structural what direction or directional bias. Very, very important. So now let's go into the real life chart example with what we've listed above here. So let's get into the chart to find what looks like what our valid order block. Our valid order block. So let's do something. Okay. All right, so let's start from maybe here. Let's start from maybe here. So at this point, this is what we have. We had this candle wick here at the down part, and we have what this low, sorry, this high, and what there was no valid break at this point. There was no break at this point. Next, we had what this point. Price gave us what a change of character. Price gave us this change of character at this point. After having this change of character, price continued to the upside, giving us what a break of structure. A break of structure at this point. Then what we had another break to the upside at this point. Now this is exactly what we want to see. So at this point, where is our order block? This is what you have as what your order block. This is what a lot of persons should be seeing as what their order block, because what this was where you had the last break to the upside. But what did you see? The market violated this. Now, why did the market violate this? Now, if you look at this particular order block, we have our what fair value gap. We have our fair value gap at this point. This will have also served as what our inducement for us to actually what take our trades. But what happened? The market violated this point because what we have liquidity sitting below our order block. We have this liquidity sitting below at this point, and that's why you see what the price actually what took out all of these zones, and the price came for what the extreme zone, which you have here. Now, this candle is not actually what giving us enough detail to actually what know if there was what a fair value gap, but what you can see, this is the origin of this entire move to the upside. And immediately what price tapped into this zone, what did you see? Price reacted impulsively to the upside. Now, after the price reacted to the upside, what did you have? You had what? A change of character at this point. After having this change of character, we now have what? This order block sitting here. Sorry, I think I didn't actually give out something. Maybe I will actually state that when we are taking the second example though. So the price actually gave us a new order block at this point. Then we also had another break or structure here to the upside, and this is what we called our inducement. This is our inducement. And what can we see? We have our fair value gap here. Now, if you look at this particular setup, you will see that we have this order block, we have this impulsive movement to the upside, we have this break or structure, we have this inducement. At this point, we have this fair value gap, and price tapped into this zone, in as much as price actually took out liquidity beneath this point before continuing to the upside. But what did you later see? Price taking out this one. That means this order block later failed. So if it's something like we actually took this particular buy, maybe we'll have actually made some profit and close this other trade at break even. Now, closing this particular trade at break even will have actually shown that this order block failed. This order block failed. So what are we supposed to do when we have this failed order block? This is what we want to see. So we'll go back to relabel all of these charts again. So at this point, we'll have our break or structure to the downside. At this point, this is not your supply zone. You can't mark this as your supply. This is not your supply, because if you mark this as your supply, you have no inducement to actually validate this particular trade, and you have all of this liquidity resting here. So what we want to actually do in this particular case is this is what we want to do. We want to label here our break or structure. We have our break or structure, and we have this high that we want market to actually take out to continue to the upside. Now, let's get to look at the internal price leg. Within this structure here, we had a sweep. Having a sweep, that means there was a transfer of high. So at this point, this is where you have your change of character. You have your change of character to the upside. All we are trying to target is price to actually get back into this zone, get back into this high. So that's what we'll be trading with. So we want to look for possible order blocks from this point all the way to this point. Now we had what this order block, which price what came into at this point, but we can't actually what trade from this particular one because what we want to see inducement. We want to see inducement. Why are we not taking a trade from this one? We had our fair value gap at this point. We have the momentum to the upside, but there was no presence of inducement. We want to make sure that what all of our criteria are being met before we get to what take any trade. So if we were to actually what wait for inducement, we will have not taken this particular trade. We would have taken this particular trade. Now we now have what another break of structure at this point to the upside. After having this break of structure, where is our order block? This is the order block we want to what wait for market to come back into. This is our order block we want to see price. We have what this momentum to the upside. We still have liquidity. We are still what targeting at this point. We have our fair value gap. This zone where a lot of persons will be seeing as the order block, that is our inducement. Yeah, this is our inducement. So if you pull your order block this way, you can actually see that what price tapped into this order block the first time, reacted to the upside. I don't know, it came back again into this zone. And what did you see? There was this expansion again to the upside. Price reacted to the downside and took out this high. Now, after taking out this high, we have no valid order block to actually what take our trade from. Because what? If we should mark this point as our order block, if we should mark this low as our order block, we have momentum to the upside, but we don't have a fair value gap. We don't have inducement on this particular order block. So you can actually see that what having a fair value gap before your order block, it's very, very important. Having a fair value gap, this gap here that we had here, is very, very important. We had the gap at this point, but there was no inducement before this particular one. So we can actually what take a buy from this one. Now we have a fair value gap here, we have our inducement, we have momentum. There was a break of structure, perfect break of structure, and price tapped into this other block and what reacted to the upside. But on this other case here, we have what momentum to the upside. The fair value gap has already been filled. There was no inducement, and what there was no fair value gap left, which tells you already that what this other block is going to be violated. I don't know if it's making sense. So if you don't have all of those confluences or all of those points I listed in your order block, then there is no point for you to actually what trade from that other block, because what the other block is already what there is no point. It's going to be used as what an inducement. So next time, or when you be backtesting or when you be practicing, do well to actually what note all of this. Now let's get to look at another example still on this pair if we have anyone. Now look at this one. We have this break at this point, and we have this other block here. We have this other block here, but we can't actually what say we want to trade from this other block, because you can see if you look at this particular other block, you see we had what a break at this point, and after having a break at this point, there was no fair value gap for us to actually what take this particular setup from. There was no fair value gap for us to actually take. So what we want to see is wait for price to come back, then either take out this low or come back to take out this high. So if price should take out this high at this point, yeah. So having this what break of structure, having this break of structure at this point, where is our order block? This is our order block we want to see. This is where we want to see price come back into. This is where I want to see price come back into. And what did you see? Price never came into this zone. Price reacted to the upside at this point. After price reacted to the upside, price took out what? This high. Price took out this high. Taking out this high, price gave us what? An inducement at this point. This is an inducement. Let's get to read the price action forward. At this point, we had what? Another break to the upside, which still tells you that what? Price is still continuing in its bullish move. We still didn't have any order block to actually what? Validate our trade, because the only fair value gap that was here, this price has already what? Tapped in. It will look confusing, maybe because it's your first time or something, but as you get to practice, you will get to actually what? Understand what I'm explaining. So at this point, the price has already what? Filled this fair value gap. So you have no reason trying to look for a buy from this point to the upside again. Now, this other one that created this high from here to this point, there is no fair value gap on this point. So if you don't have your fair value gap, you don't have that momentum coming from that zone, we have no reason to look for a buy. So from this low to this point, you will have no reason trying to look for buy. So what we'll be looking for is what? Maybe possible reversal on the market for us to actually what? Look for sells. So let's assume we want to go in for a sell market. This is the last low. At this point, we had our change of character at this point. So having a change of character, let's get to understand the price action to the downside here. So having a change of character at this point, what we want to see is what? If you see at this point, we have this fair value gap here, and you can see the momentum the candle came with. The price pulled up but didn't get into this zone. So from here, how do you get to know when price has filled a fair value gap? Now look at this. This is the fair value gap here. Where I'm drawing this arrow from, there was a fair value gap. Now if you look at this candle has already taken out the liquidity there, so it's already filled. So you can't say there was a fair value gap there, then you now come and mark order block here. No, it doesn't work that way. The price has already what? Filled that. Now look at this one here. This other fair value gap is still not what? Used. So you should be expecting what? Price to possibly what? Come back to fill this. That's if this price has actually what? Continued to the downside to actually what? Fill this before what? Continuing to the upside. So this is what we want to see. We want to see this space not filled. This gap not filled. Look at this one. This one came very close but didn't fill this one. So now let's get to look at this other fair value gap here, so you get to actually understand. Now look at this fair value gap here. Look at this gap. This candle pulled up but didn't fill this gap. Now when I'm talking about filling this gap, this is what I want to see. I want to see price come back to, let's say, something like this, pull up to this point. Now once this price pulls up to this point, then what? You don't have a fair value gap again. That means there's no fair value gap at this point again. Now let's get to maybe look at the most recent price action, so you get to actually what? See. Okay, now I think I'm seeing one clean order block at this point. Now look at this one. Look at this gap here. Look at that gap there. Look at this gap before it was filled. Now this is what you refer to your fair value gap. Now this one has already been filled. So let's say we wanted to mark our order block for this particular scenario. This is what you would do. We have our low taking out, giving us a break or structure at this point. So having our break of structure at this point, we have another what? Break at this point to the downside. Now where is our inducement? This is our inducement here. Now where is our order block? This is our order block. So you can actually see that what? Because we had this fair value gap still resting here, this pulled price all the way to this point before what? Dropping to the downside. So this is what I was trying to explain, that we want to see what? A fair value gap. We want to see what? An inducement. Then you can actually see the momentum to the downside, the way this price dropped. Meaning what? If price should come back into what? This order block or this supply zone, you want to actually what? See price crash to the downside. So this is what we mean by what? A valid order block. Or this is what we want to see for what? A valid order block. Then when we talk about what? Invalid order block, this is what we have for invalid order block. Look at this. Look at this zone here and look at this zone here. We also have another one at this point. We also have this one. I want to take this out. So now this is an invalid order block that I'm marking. So if you look at, we had a break to the upside. There was no inducement here. In as much as you had this little fair value gap here, price tapped in and it failed. Now why did it fail? Those criteria listed were not met. Sometimes you will see price actually will move from what? An invalid order block. The market is always right. Now, if you look at this point, what happened? The price didn't fill this one. There was no fair value gap. Price didn't fill this one. So for those that have actually were traded order block, I believe some people must have been trading here. So for those that have actually traded order block, they will tell you that what I've just explained here is right. Or most of them have actually suffered from this. Marking what? All break or structure as order block. Or marking all zones you see as change of character as the order block. No. You must meet all of those criteria. The zone must contain what? Momentum. The zone must have what? An inducement or liquidity. The zone must contain what? A fair value gap. For you to consider that zone as a valid order block. Now, trying to implement all of these points I've listed, we actually limit the number of trades you would take in a day. Now, let's get to check a different pair to maybe actually get something. Now, let's maybe check Solana. I want to use one crypto pair as an example for this. And let's look at maybe the most current price action. Alright, so let's look at this. Okay, I think this is visible enough, or let's work with 2 hours so it doesn't get to strain our eyes. Alright, so look at this now. We are on SO USDT 2 hours time frame. 2 hours time frame on SO. So this was the last low we had. So at this point we have what? This change of character. You have this change of character here. Before that we had this last break of structure. After having this breakout structure, we had another what? Change of character at this point to the upside, and we have our what? Change of character to the downside here, which tells us that what? We are bearish. Now after price took out this high, because this was where we had the last breakout structure, we have this high. If you get to look at this price action, from all of these points, you will see where the momentum kicked in was from this point to the downside, which gave us what? A break. Again, meaning what? This was the external what? Change of character, which confirms that what? We are in what? A bearish market. Now, when you have this confirmation, the first thing I want you to actually what? Look out for is what? Where is the liquidity you're trying to target? First, this candle wick. We've already talked about liquidity before today, so I'm not going over that. This candle wick here is where you want to what? Be targeting. Then the next one is possibly what? This low here. This low here. So now we already have this target. This is the first place we actually want this price to get to. So now, if you look at when the price, why the price was dropping, we have what? Our fair value gap here. So let's get to label this fair value gap. Now the next thing we'll have is what? Our order block. Where is our order block? This is our order block. At this point, after having our order block, can we confirm there is a momentum within this candle? Yes. You can see the drop, the way the candle was dropping to the downside. Price didn't come back to mitigate this zone. So let's assume price still was continued to the downside. Now price took out all of the liquidity we were expecting at this point and started what? Retracing to the upside. Now while price was retracing to the upside, this is the mistake a lot of people will get to actually what? Get to make. Now this is the last breakout structure. Now they will now come here to mark here as what? Their order block. This is what they will mark as their order block. You can mark this as in as much as this is the last breakout structure to the downside, but this can be a valid order block because what? You have all of this liquidity resting here, just like what we had at this point here. So you have all of this liquidity resting here. This is what? A trend line liquidity resting at this point. So if you have your order block or you have liquidity above, resting above or beneath your order block, definitely there's a high probability that order block is going to fail. There's a high probability the order block will fail. So in this scenario, having this order block or having this liquidity here and having this order block, this tells you that what? If this market is able to actually what? Break above this high to continue to the upside, we should be expecting what? More bullish push to the upside. Now, expecting more bullish push to the upside with all of this liquidity, this is what will guarantee what? This order block to actually what? Hold at this point. So let's get to extend this to this point. Now, from our markup here, the price came very close to our order block, and what? The price started dropping to the downside. So sometimes you can actually what? Have a very valid zone and price will come very close to your zone without tapping you in, and it's normal. But the most important thing is when you actually mark the right zone with all of your criteria in place, it will actually what? Help to improve the type of setup or the profitability that comes with your setup. That's the advantage. Now, you've already missed. If you were taking a sell here, maybe you'll have been lucky to actually what take this sell, and price will have maybe given you few pips before what coming to hit you at break even before continuing to the downside. But let's assume you are waiting for this one. Price will have come very close to this without mitigating, and you'll have missed this particular one. So it's more preferable what you have to miss than hitting SL, because you can't miss all the time, and it's normal to actually what miss trades. It's normal. It's not like it's something against trading or something. No, it's normal for you to actually what miss trades. So let's assume we've actually what missed this particular setup. Let's get to look for what would have actually possibly was done in this case. So at this case, this is what our change of character here. This is what we have as our change of character. And where is what our order block? This is our order block. So I want to see this price what come back into before what continue to the downside, because we had this fair value gap that price was supposed to fill, that maybe giving us inducement. So price gave us this inducement. Maybe we would have possibly waited for this price to actually what retrace into this point, but price didn't actually what give us a second entry, and the price what dropped all the way to the downside. Maybe when we get to actually what maybe the next class, when we'll be looking at maybe entry confirmation or order block across what different time frames, then we'll actually what get to see what we can actually do when we have this type of miss setup. We can now maybe use smaller time frame to actually what possibly look at what to do to actually what take some trade. But we are not chasing the market. We are not chasing the market. We are doing what we have to do and do it rightly. So let's maybe look at another pair with this same example to actually get something. Okay, so this is USD card. Okay, we've done something on this before, but let's still get to look at something. All right, so I want us to do a sample here. I want us to do something here. And I want us look at this. So I will get to color this and color this. And make this red. Maybe make this yellow. Okay. So looking at this setup, let me get to put everything intact. We have this break at this point. We have this break at this point here. We have this impulsive move at this point to the upside. The market has given us what? Liquidity. All of this has what? Our liquidity at this point. Yeah. So I want us to do something very, very simple now. Is this a valid order block? The yellow one? Or this is a valid order block? So let's know in the comment section. Pick your option and reasons why the first one is the order block or the second one. If it's the yellow one, state the yellow one and the reason why you think the yellow one is what? Your order block. And if it's this last one, also state red and reason why you think the red is your order block. Let's get to do this very fast. Which one is the other block? Which one are you going with? I want everyone to actually answer this so we know if you are following, or we need to. Don't be ashamed. Pick your answers and get to explain why. Say something. Say something. I'm looking at the comments. Say something. Let's study together. Which is a valid order block for you? Which is a valid order block for you? The yellow one or this? Okay, so Joshua said the red one. This is because there was an impulsive move to the upside. Excel said the yellow one because price has violated the fair value gap in the red one. Excel, please look at the chart. Well, sorry, maybe you're not zooming out properly, or my screen is not visible enough for you. Okay, Ruth said the red because there is no liquidity before it. Let's get more suggestions. I think we're over 18 on this live stream, so I want to see 18 answers. 18 answers. 18 answers. Okay, Kevin said, I think it's the red one, sir, because there was an impulsive pull, the upside, and there is an inducement there. Okay. We've gotten 4 answers. 4 answers, so remaining 14 persons to actually drop theirs. Blessed said the red block because the fair value gap of the previous has not been filled. Okay. More answers before we decide this together. Let's decide this together. Let's see. I think some persons are leaving the live stream. Is it because of the question? Okay, you've changed your answer, Excel. Let other people get to drop their comment. You don't need to be shy. Say something. Say something, and we are here to learn. You don't need to be shy. There is no cane or something. State which one. Okay, if you don't even know the reason, okay, just say something. Yellow or red. Just say something. Yellow or red. Let's assume you don't know the reason. At least mention something. Mention something. So I think the red because price has not taken out liquidity. Price has to take, okay, the red. This is because all the criteria are met. Okay. Okay, so now let's get to look at first one. We have this impulsive move to the upside, which gave us what? A break of structure. At this point, we have liquidity before this order block. Now, this order block actually met our trading criteria, but one thing was lacking. It's not like we didn't have momentum there. But when you have this type of scenario, most of the times when you have this type of scenario, the one with a bolder momentum or impulsive move takes the lead. So if you have this order block, okay, I think Paul has already stated stated it out. Okay, so you see the momentum from this point and this to the upside. He's not. People are not answering now that I'm not explaining. Okay, Paul said red one is the order block. It has fair value gap. It has liquidity, price, drawdown, momentum. I think it's the red one because there is order block before the BOS. I think it's the red one because there is a valid order block. Still the same thing. Red one because they are lying before the yellow order block, so it will definitely take out the liquidity. I think everybody is not thinking it's the red one. We don't need to think. We don't need to think. Okay, so now if you look at this yellow one, if you look at the yellow one will have actually what been our order block, because you see we have this liquidity resting. There's a liquidity pool before this order block, but this will definitely what this 90% that this will fail, because we have a bolder momentum here. And if you look at this point, this fair value gap has not totally been filled. When this fair value gap will totally fill this, when we see price, if you see this price drop something like this, if this fair value gap has been filled to this low, then it's no longer what a valid point. But for the fact we still have this open gap with this momentum, then this other block will not serve as the inducement. I think maybe I think we're actually what following. So sorry, excuse. So this one will serve as our inducement, and this will be the other block for us. Now there was something I was supposed to state from the beginning that I didn't actually what state. It skipped my mind, sorry. So for us to actually what mark our order block, let me take everything and zoom in the chart properly. Let me get to, for us to actually mark our order block properly, if you want to mark a buy order block or a demand zone, that's the right word, a demand zone, so if you want to mark a demand zone, the last sell candle before the upward move will be our demand zone. So if you want to follow the last sell candle before the up move, this is the last sell candle. This candle here will be what our order block. There are exemptions, and we'll get to look at that while we are practicing more. Now, and if you are marking a sell order block, it will be the last buy candle before the sell move. So let's just assume we have this as our order block here. So this is what we'll have. This is the last buy candle before this sell. So your order block will start from this candle. That's what you have. Let me, this yellow looks so off. So off. Yes, this is better. So let me take out the border. Okay, so this looks perfect. This looks perfect. I think this should be bold for us to see. Okay, let me leave it like this. I think this is okay. So you can actually see that what this is what it will look like. This is what it will look like. So if we want to mark the last sell candle on this point before the buy, this is what we will have. We will have this here. This is what we will have. So for this one, this will serve as our inducement. This will serve as our inducement, and this will be the right order block to actually take our trade from. So this is our inducement. This is our inducement. So we want to actually see this price drop all the way to this point before what? Taking this buy move. Now, in time to actually see something, I think I've seen another one here, another one at this point. So at this point, we have the last sell candle before the buy at this point. And what can you see at this particular order block? We have our fair value gap here. We have this break of structure here. And I've already explained that when you have this type of break of structure, you have no business trying to look for a buy. Even if you are going down to the smaller time frame, even if you are going down to 5 minutes, you have no reason to look for a buy. Do refine entry, refine and come to where you are seeing the most valid stuffs. So now you have this. Now, what did you gain? You see, we have this liquidity. We have this liquidity here at this point. After having this liquidity, you can actually see that we still have our fair value gap yet to be filled properly. So once you have this fair value gap still empty, and what did you see? Price tapped into this zone. Price tapped into this zone, and when price tapped into this zone, you see, we had a reaction to the upside. After having a reaction to the upside, let's get to look at the next place we had was order block. Now look at this point. If you look at this point, this was where we had the last sell, the last sell before the buy here. Now after having this last sell before the buy at this point, we have this fair value gap, but there was no inducement. There was no inducement, and since you don't have any inducement before this zone, what did you see? Price tapped into this zone and responded to the upside. Yes, no doubt. Just like what I said, price will respect even some invalid order blocks. It doesn't mean the order block is invalid, but I call it invalid because what? It doesn't meet with my criteria. It doesn't meet with my criteria because one thing you need to actually understand is what? It's not about clicking buys or clicking sells. The rules you've added is what will actually help you to actually understand when to actually place a buy or when to actually click a sell. And that's how we don't actually take our trade from all order block. So personally, I won't have any business with this type of order block. Once I've seen this, let me say I mark this order block and I had this fair value gap. I was expecting price to create some liquidity before getting to this one, and price didn't actually give me what I wanted. I won't take this. If you see, price already mitigated it into this point. All of what I would have having here, I would have been expecting this price to continue to the downside to take out all of this liquidity. But what happened? Price reacted to the upside. And that's one crazy thing. So you don't need to frown at yourself or regret or something like, I would have actually caught this buy to the upside. No. Now let's get to see if we'll get another example. Then we'll look forward a bearish order block. Bearish order block. Let's see if we'll get one at this point. I'm not seeing anyone for a sell. Let's maybe check. Let's check a different pair to see if we can see something different. Take out. So let's see if we can get something, a bearish order block. I think this market is selling, so we can actually get something. Alright, so let's look at this particular price action. So looking at this particular price action, I can see we have this supply here. We have that supply there, and we have a change of character here. After having a change of character, let's get to see. We have this sweep, and price eventually took out the low at this point. After taking out the low, price gave us this order block. Giving us the order block, price gave us this inducement here. Now, if you get to look at what I marked, you see the impulse move to the downside. There's a fair value gap at this point. Price have given us what an inducement, and we are expecting this price to pull all the way to this point, but the price reacted from this inducement zone to the downside. So let's look at price forward. Let's get to see the price action. So at this point, this low was eventually taken out. This low was taken out. Price gave us this inducement, which was later transferred to this point. Now we have this supply zone. This supply zone sitting here. Let's mark this properly. All right, so we have this supply zone at this point, and price didn't come back to mitigate. Price took out. After price took out this low, price reacted to the upside again, filled all of this fair value gap to the upside. Now don't forget, this is an inducement zone. This is an inducement zone we want to see price take out, because we don't have any sufficient sell like supply zone or order block for us to actually take a sell from. So what we have here is liquidity, and what we also have here is liquidity. This is liquidity, and this is our inducement here. We have this as our inducement. So what we want to see is since this is the last supply we have, and we have this fair value gap. Not just this fair value gap, you see the momentum from here to the downside. So this is like, let me give you the diagram again. This is 1, 2, and 3 to the downside. So, and you know, when we are actually drawing the price move, we said this point is always our inducement. So if this point is always our inducement, then this is our order block. So let's extend this to actually see. So looking at this particular price action, what did you see? Immediately price ran into this supply. You see you notice the drop to the downside. So this is something I was actually explained that when you actually understand your directional bias, you know that you are bearish. Now this is okay. Let me get to zoom this in. Maybe let me put it on 4 hours. So let's put it on 4 hours to actually understand this whole concept better. Now let me take out everything on this chart, so that when you are going to actually mark your setup, you won't end up going to 1 minute and you just all of the noise on your chart. So now look at this particular chart. Now look at this chart. I want to mark it on 4 hours picture. Now look at this. We have this break. The break to the downside here. We have this break to the downside. Now, having this break to the downside on 4 hours, where is our inducement? This is our inducement. I'm marking it on 4 hours now. So you see it's neater on 4 hours compared to 1 hour or 2 hours. And that's why I was like, if you are starting, always get to start your chart from 4 hours. It's actually help you to actually filter the noise. So look at 4 hours now. The chart is not confusing, unlike what you had on 2 hours. So this is 4 hours. So having this on 4 hours, this is our inducement. This is what we want to see on the 4 hours. We'll mark our what? Supply here. This is what we have as our supply. Where is our fair value gap? Look at our fair value gap. We have fair value gap there. Price what broke structure here, broke structure to the downside. You can see we have this momentum. So from the external range, this is our external range. This high and what? This low is our external range. So having this external range, this tells you that what? The directional buyers. I think I've actually dropped a video on directional buyers. See, when you're done with this class tonight, go through the channel under videos. You will see where I explain what directional buyers. We've done that also in this class, but if you actually want to understand directional, that video was dedicated to what? Directional buyers. So you can do it to actually what? Take care. You get to understand. So the directional buyers of this market or the market structure is bearish. This structure is what? Bearish. We are in a downtrend. The market is in a downtrend. So for the fact that the market is in a downtrend, and at this point, this is your inducement. So till this order block is actually violated, that's when you can actually say, more, we are bullish. That's when you can say we are bullish. So now, look at this point. Immediately the price reacted to the downside. So from the 4 hours, there was a clean imbalance of fair value gap. We had our order block, we have our inducement, break of structure, momentum, impulsive move, all of those things, they were all there. Liquidity, everything was valid. So it was a clean trade, and price what? Started selling to the downside. Now, let's step down to the 1 hour to actually see if we can get continuation on this particular what? Setup. So let's step down to the 1 hour to see if we can actually what? Call out a trade on this particular one, fair value gap. At this point, we don't have a fair value gap. So if we want to look at this particular setup now, this is what we want to see. We want to see price come back into this zone. I think this is too right. We want this a little bit lighter. Alright, so this is okay. So I actually want to see this price come back into that zone. So remember, we have our break of structure here. We have what's our fair value gap. There's a fair value gap, but there's no inducement yet. There's no inducement yet. So I want everyone actually would get to monitor this particular trade and see what the price will do at this particular point. I want someone remind me in case maybe it skips my mind or something. I want someone get to remind me of this particular. So someone should get to screenshot this and get to see what will happen. So this is what I want to see. This is what I want to see. I want to see this price pull this way, give me my inducement, then what? Before tapping into this point, then what? Continue to the downside. Someone should actually take a screenshot of this. Someone should actually take a screenshot. Now, if something like this, if this price should just pull all the way to this point, then I won't get to take it. Then it's not a valid setup for me. If this price just pulls straight into this zone, it's not a valid setup for me. It's not a valid one for me. Except it pulls into this point, then gives me what? Confirmation on a smaller time frame to actually what? Sell. And that's what we'll be looking at maybe in the next one, actually using what? Confirmation entry on smaller time frame to actually what? Validate our order block to get the best out of our order blocks. So that is it. So I think we've actually what? This is already 9:24. So I want to entertain questions, for sure we'll be taking another class on order block again, because this is like one of the major stuffs in smart money. This is like one of the major stuff. So next week class on Wednesday, or if we can have a class on Sunday or something, I don't know, but we'll discuss that on the group. But let's say the next class, the continuation of order block, I want us to do a lot of practices, back testing, and all of those things. We have to practice till we get to actually understand all of this concept properly. So let's entertain some questions now before we end today's section. Let's entertain some questions. If you have questions, let's get to entertain your question. And while we are taking questions, if you've not given a thumbs up to this live section, do well to like this live section. Do well to like this live section as we are entertaining questions. No question. No question. Okay, so we said order block are those points or those zones in the market where you have large market orders. So let's get to do this. This is what it looks like on the chart. This is what it looks like on the chart. So this is what you will see. That's why I say it's a zone. You see this accumulation before you see this drop. You see the price will come accumulate at this point before it drops. So this point is your order block. So what it simply means is we have orders. You have pending orders here. You have pending orders here. So let's get to assume, looking at the last chart we'll look at. If you look at this price pulled up. They were buying at this point. The price was buying at this point, and it got to this point. The price dropped to the downside. Now, what caused this point to actually drop is because of these sell orders. Now, having this sell order that dropping to the downside, we still have some orders left here. Now, not just having some orders left here, a lot of persons or a lot of market participants seeing this reaction from this point, a lot of retail traders and even institutional traders will come to actually place their orders here, waiting for market to come back. And you having orders at this point is what will actually pull this price all the way to this point, then sell. Now, if the buy pressure to this point, then the orders, people buying, they want to take their profit and then open short position or open a sell position. So the more sell position you have here is what will pull this price down. And that's how we said what? Liquidity is what? In a simple term, money. This candlestick moving is because of what? The money in the market. Money is the volume. Money is everything that controls the market. So if the institution or the banks want to liquidate the what? Retail traders, all they have to do is to push this price above before what? Selling down. They can do it. That's what? Market manipulation. Because what? The institution don't want the retail traders to actually what? Make a lot of profits as they are. They want to control the market. So they will take the market, like manipulate the market against you for their own benefit. So that's it. So that's why we actually said we want to see inducement before this order block, before we get to what? Take this order block. Without inducement, I'm not taking this order block. And as time goes on, that's the rule we'll be working with for like 1 to 3 months for those that will actually want to stay in the group that will create for those that are interested in what actually what dropping setup, those that are actually interested in sharing ideas, those that are actually interested in weekend calls where we'll come to analyze the chart together and share ideas. So in that group we'll discuss a lot. So that's it. It's a free group, but it's only for serious-minded persons. Only for serious-minded persons. So that is it. So without inducement, we are not taking this. Whether the trade plays out or not is none of our business. But our rules must be what? Met. We are not trading anything outside of our rules. We are not trading anything outside of our rules. So that's it. Any other question? Any other question? Any other question? If you've not liked the live section, please do where to hit the like button. It's free. Do where to hit the like button. And if you actually got value from tonight's section, let me also know in the comment section. How was the live section? How was the concept today? How was this topic? Let's know in the comment section. Definitely a lot of persons will actually be struggling with actually understand. A lot of persons will be finding it hard. Some persons will be like a whole different thing altogether tonight. But the truth is, don't worry. Provided you stick around, you will get to understand the whole concept. What you just need to do is go over, practice, and by the next class, you will get it clear. Then maybe when you get to do the assignment, you also get it clear. Do well to participate. Do well to participate. Those that submitted their assignments within the week, they will tell you how the correctional class went. A lot of things you actually review. They were able to ask their questions properly and all of those things. So when I give assignment, do well to actually do your assignment and submit. If you have issues, see, it's best you fail and fail now than to fail when you funded your account. So don't get shy. Don't feel like you're not. Keep on doing it. See, the messages I have from this particular WhatsApp group on my DM daily, like sometimes I just look, I will say like over 30 messages from this group, people sending in their chats. And I'm very, very happy. I'm very, very glad. Whoever sent me chat knows very well about. I attend to them properly. I'm okay. So practice. That's it. We'll keep practicing till we get it right. So the next class we'll be looking at order block and order blocks across different time frames, and more especially on the smaller time frame, we'll be looking at entry confirmations. Because a lot of persons want to like this particular order block now. Someone will want to refine this order block to like 5 minutes, 10 minutes, 15 minutes, depending. So we'll look at all of those things and you will get to practice it. And how will you get to actually understand the one that will best suit you? When you practice, that's how you build your confidence. And this particular class is not just to come and teach you and go. I want to actually teach you, and you should be profitable from what you've learned. So that's why my DM is always open. Even if you don't even message me on WhatsApp, even if you drop a comment under this video after today, whoever has ever dropped a comment will tell you that you get a reply even within 1 hour. We are active to reply you, don't worry. So, alright, so you really laid the grain for us to giving us hot stuff. Alright, so sorry about today's class. I think from my own observation, it looks like it was kind of like dull or something. But I'm not feeling fine. I'm not feeling fine. I just have to still struggle to come up here because I'm dedicated to do this. I'm dedicated to do this. So thank you for tuning in. Please do well to practice and do well to send in your chats. Whatever you're having issues with, we'll always talk it out on my DM. Alright, so thank you for all. Thank you everyone once again. Keep flying, keep showing up, and definitely one day you'll give your own testimony too. So we'll wrap it up here tonight. Good night. Do well to use this weekend to backtest. Do well to use this weekend to actually practice everything you've learned this week, last week, and all we've done all through. Do well to practice. That's the only way you get to improve in this whole trading stuff. This is a lifetime skill. So please do well to be serious. Alright, good night. Thank you.